Hello guys, welcome back to another video. Today we are going to take a look at the dollar index as well as the NASDAQ 100 from a technical, fundamental and order flow perspective. Now if you are new to the channel, the sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now we're going to start here with the dollar index. Firstly, on the monthly time frame, it's clear that the market is currently breaking above the strong level of resistance from a monthly time frame, but the month is still long and anything can happen. And if you look here as well, you can see that the market had at one point printed this massive wick and then rejected all the way, closing below this level. So there's a high possibility that we could potentially see the market still close below this level as well, because the last structure that the market had created was sitting at this level over here, which acted as a level of resistance. So we expect the market to pull back, hit that level of resistance, acting as support before that continuation to the upside. Now from a weekly perspective, we can firstly see how the market is currently yet again testing strong resistance. But apart from that, the market had also broken above the strong level of resistance, which is now acting as support, where we expect the market to pull back to. Also, the market printed this massive impulse. After an impulse, you expect a correction. And the best way to measure that correction is by taking your Fibonacci from the low to the high of this impulse. And you can see how the 61.8 is lining up perfectly with that previous structure, giving us an indication that we can definitely expect the market to pull back there as well. Now, from the daily time frame, what do we see? Now, from the daily time frame, we can see this was the last or the most recent structure resistance that the market had broken. Now, all of that resistance is now broken and is now acting as support. So if you take your Fibonacci from the low to the high of the impulse, we've got a 0.382 pullback, giving us an indication that we can definitely expect the market to pull back to this level before potentially continuing higher and go and hit that monthly resistance level over here before potentially continuing higher there as well. But that is the reason for the why we can see this. And also the dollar is still one of the world's most what's the word I'm looking for, like dominant currencies, regardless of how the economy is doing. But the thing is, the one thing that we need to keep in mind is that the Feds are going to hike interest rates for the dollar quite aggressively this year, and we are going to see the dollar increase in value quite aggressively over time. So there's a high possibility that we are going to see the dollar index go back to these levels over here, 120 even. So it's not impossible for it to get there. It is going to get there with the amount of times that the Feds are going to hike the interest rates this year. We can see that, but the market unfortunately doesn't move like this. The market moves in waves. This is how the market moves. So because of the the high interest rates that we can expect, the dollar is going to increase. There is no question about that. The thing is, it's just not going to happen now. Now, the next thing we are going to look at is the commitment of traders. So this tells us what the biggest speculators are doing in the market. So the big banks and hedge funds. Now we can see based off last report, hedge funds came in. They added 3,265 long positions. They also added 5,480 short positions. They also, and we can see how the overall net positions is sitting at a 911 pause to minus 2,215, giving us an indication that we can expect the dollar index to decrease in value before it continues to the upside. Now, that is the update on the dollar. So we can expect this pullback before the continuation to the we can expect this pullback down before that continuation to the upside. Next up, we do have the NASDAQ 100. Now, the NASDAQ 100, starting on the monthly time frame, we can obviously see the NASDAQ is currently testing strong support. This level over here acted as a level of resistance. The market broke above that, came to test it as support over here. And we can definitely expect the market to bounce in between these levels here as well. Now, one of the main reasons why there was such bullish momentum on the stocks today was exactly what I was speaking about on Sunday, because it's season earnings and because of high CPI data for the dollar index, we can definitely expect the CPI data to be quite positive there as well. Now, if you look down here on the weekly time frame, what do we see? Now from a weekly perspective, firstly, we can see how the market printed this impulse and that correction. Now, if you take your Fibonacci from the low to the high of the impulse, you can see how the market tested, rejected the 61.8, which is known as a golden ratio. Now, if you put your Fibonacci on this correction, you can see that we do have a target of the minus 27 lining up perfectly with that previous level of support that is now turned resistance. And if you drop down on the daily time frame, what do we see? Now, from the daily time frame, we can see how the market is currently stuck within the strong level of support. Resistance got broken, it's now acting as support, and the market is now also testing previous strong resistance here as well. Now, the best way to approach the situation, because as traders we have to be reactive and not predictive and learn to adapt to the ever-changing market environment. So we are going to wait for a clear break above this level, and then on the retest we're going to start looking for buying opportunities, because we obviously expect the season or for the the earnings report to continue to be positive for stocks, probably up until the Federal Reserve announced their next rate hike there as well. Breaking above this level will also give us the confluence of a W formation. Now, after a W formation, you expect a pullback to the neckline before that continuation. And the W formation is considered a bullish pattern from a technical perspective. And if you look at the story here from Dow Jones, it says here, sorry, from CNBC, the NASDAQ jumps 2% as investors digest latest bets of corporate earnings. And like I said on Sunday, it is earnings season, so we can definitely expect some positive news or some positive movement for stock markets up until it gets halted again when the Federal Reserve starts speaking once again. So it says your stocks have been under pressure recently. Both sentiment and positioning are now bearish in our view, while we slightly reduce our equity allocation. Well, that's a lot of talk, but what we know is we can see some bullish momentum on the NASDAQ. Hopefully get to that level by the time the Federal Reserve start talking about this interest rates there as well. Next up, we are going to look at the commitment of traders for the NASDAQ. We can see here, based off last week's report, they actually came in, added 9,555 buy positions or long positions, and they closed minus 12,068 sell positions. The overall net positions had increased from 2.5k to 21k, giving us a further indication that we can definitely expect this continuation to the upside, potentially for the market to go and test this previous level over here, and then we can definitely expect we can then start monitoring the price action from that level and start looking for any continuation to the upside. Now, that's all from my side. I want to thank you for your time, and as always, cheers for years.